Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is March the 15th. It's about 9:30 p.m. A lot of stuff has been going on. I've been busy, preoccupied for the past few days or so as I was kind of wrapping up my taxes for all my businesses for the past year. And by the way, I was filing a lot of K1s. A lot of people ask me questions about partnerships like ICANN and Alliance Bernstein and Energy Transfer and said, what do you do with all these K1s? And to many of those people, I replied and said, a K1 is kind of like a W-2 if you're a U.S. tax person or 1099. Um, what you have is a form with a whole lot of boxes on it, and there are numbers in the boxes. And if you file your tax return yourself, you need to match up the amounts that are in the boxes with the information that is requested in your tax filing software. And if someone else is doing it for you, well, then they got to do that. But it's not really a scary thing. The fact of the matter is, if you receive a K1, you're a partner in the organization, and you have to file your profit and losses as they were for the year. But there are more important things to discuss because the markets are in turmoil, and I want to take a few minutes to kind of take a look at what is going on. Now, the first thing I want to do is just go to Google Finance over here, and I'm live right now. So as I said, it's March the 15th. It's approximately, well, it's not 9:30, it's 9:47. So it's 9:45 in the evening. You can see the futures are a little bit green for tomorrow. And of course, today the market's tanked. Everybody knows that by now, so I'm sharing old news with you. But what I want to do is just show you the headlines here, because sometimes it's very difficult to remain calm when you see this sort of turmoil and everything around you is on fire, falling down, crashing and burning and all that kind of stuff. Let's take a look at today's financial news top stories. A couple of hours ago, CNBC, the US cable network, said Snap stock surges on report that Biden might ban TikTok. NPR, okay, I'm not going to have a discussion here about fake news, but why customer service ratings are getting worse. That's the headline. How about this one for not fake news? The New York Times. No, diversity did not cause Silicon Valley Bank's collapse. We're going to talk a little bit about that in just a second. CNBC again, Virgin Orbit, Los Angeles Times, a tasty LA mystery, unwanted Uber Eats food. What I'm sharing with you here is that these are the top stories. None of the top stories really talk about what I'm going to talk about in this particular video that I'm going to share with you. But I have put a short presentation together for you. So stick with me for a minute. Let me call this up and we'll talk about this just for a couple of minutes. So there's a lot of stuff going on, right? Today, of course, we heard that the crash and collapse of Credit Suisse is imminent. Now, people have been saying that about Credit Suisse for, I don't know, the past couple of years or so. But in the last day, for sure, it's been headline news because the Saudi National Bank refused to increase their stake in Credit Suisse, which means they would not effectively lend them more money. Now, if you're a Saudi banker and you're running a petro-based economy, the last thing you want to invest in is a Swiss bank. Make of that what you will, but effectively what they said is their regulations prohibit them, this is the Saudi National Bank, from increasing their holdings in Credit Suisse to more than 10%, and they are right at 10%. So they will not be giving Credit Suisse any more money, and as a result, Credit Suisse is in trouble, as they were yesterday and the week before and the month before that and last year and so on. But there are a lot of other banks in the news, obviously for different reasons. The news that kind of is flying just beneath the radar is First Republic Bank. And of course, in addition to that, you have the news about Silicon Valley Bank. And of course, even today, Charles Schwab hit the news headlines for a variety of different reasons. But anyway, these are some of the crashes today. So Credit Suisse down almost 14%. I believe this was at the end of day, so it might have been the final close. First Republic Bank down another 21%. And Credit Suisse, as I said, down 24%. And then at the bottom, you see Charles Schwab up 5%. Now, before you get too happy with Charles Schwab being up 5%, maybe what we should do is just take a look at Charles Schwab over the past year or so, and you can see that just over the past 1 year period, Charles Schwab has not been doing very well at all. In fact, it was trading at $75 on April the 18th, 2022, so about a year ago, and now it's trading at $60. So not too bad in the greater scheme of things, but as you can see, it took a precipitous drop just over the past couple of days or so, despite the fact that it recovered a little bit today. So what's going on with Charles Schwab? Well, Charles Schwab is almost a larger version of what happened with Silicon Valley Bank. The Silicon Valley Bank disaster, from a failure point of view, was basically a combination of mismanaged asset allocation. What they did was they invested in a variety of different treasuries, and as the Fed started increasing the rates, these things plummeted in value, and they had to start selling some of their treasuries effectively at a loss to raise some capital, and they were caught short. So what's happening with crude oil? Because now crude oil is effectively just crashing and burning at the same time. So most of the smart people are telling us that because the banks are collapsing and failing, this indicates a recession. Now, I have talked about this before because we have actually technically been in a recession for quite a while, because originally a recession used to be 2 consecutive quarters of negative growth, and we're already in the 3rd one, going into the 4th one. So regardless of what the Biden administration tries to convince American people about in terms of the economy being strong, we are effectively in a recession, but it's actually been a relatively mild, or let's call it recession-light scenario that we've been operating in. And of course, it's been worsened as the Fed have been increasing rates over the past few months or so quite aggressively. And we're not sure yet. It's kind of now maybe 50-50. Are they going to increase rates again, or are they going to pause for a while, given all these market turmoil events that have happened in the past couple of days? The futures contracts for oil. So right now we're at around $70 for WTI, which is horrible from the point of view that a year ago, it was, or just a few months ago, 6 months, 7 months ago, we were at $130. And now we're at 70, so quite a precipitous drop there. But of course, the oil companies are still making money hand over fist. The problem is the shareholders are not, because most of the time we are focused on an increase or return on investment in terms of stock price rather than the yield. But maybe I'll talk more about that in just a second. Brent down to $72, super cheap. Is it going to stay that way? Yeah, we'll come back to that one in just a minute. What happened at Silicon Valley Bank? So let me just give you a little bit of background quickly before I go further into this presentation. So I can't really share too much information with you as it relates to Silicon Valley Bank and First Republic Bank. The reason for that is both these banks were effectively my clients or partners going back about a decade or so ago. I don't have a non-disclosure in place, so there's nothing that prohibits me from sharing information. But at the same time, I don't think it's appropriate, firstly, because it's 10 years out of date, and secondly, because therefore it's no longer valid today. And secondly, because I don't think I should share a personal opinion on the bank's management or anything like that with you. What I can tell you, just in terms of full disclosure, is that the company I represented about 10 years ago acquired a little piece of business from Silicon Valley Bank. That was my link to Silicon Valley Bank, so SVB. And that's called a carve-out. We actually purchased a little part of their business. And First Republic Bank was actually my client back in the good old days in San Francisco, going back to 2012, 2013. So a decade ago, First Republic Bank was my client for stock plan administration services. But in addition to that, I was also working to set them up as a broker on the back end of our software system so that they could do their own trade execution. Now, that's by way of background. So I do have some history with these banks, so I don't want to spend too much time talking about it, and I don't want to go into any depth, but I do want to share with you the story as it relates to what's going on in the market today. So on Wednesday, Silicon Valley Bank suffered a $1.8 billion after-tax loss and attempted to address its liquidity crisis by selling equity, which would have diluted their shareholders and obviously was a way for them to raise money. Ironically, the company that was guiding them in this particular transaction was Goldman Sachs, who also said, you can buy bank stocks right now. Anyway, the move backfired. In just 24 hours, Silicon Valley Bank lost $160 billion in value and spooked depositors who rushed to withdraw their money before the situation got worse. Regulators stepped in on Friday So today is Wednesday, when the Federal Deposit Insurance Corporation, the FDIC, took control of the bank. They said in a statement that SVB had $209 billion in assets and $175.4 billion in deposits at the end of 2022. It guaranteed that insured deposits up to a statutory limit of $250,000 would be made available by Monday. That was Monday of this week, 2 days ago. Now, there are a few people like Kevin O'Leary who said he will never invest in a bank stock again because effectively the administration has just nationalized the banks. Now, what happened with First Republic Bank? It rose 4% on a report that it is elevating strategic options, including a potential sale. This is, as of now, right now, fresh off the press. The bank, whose shares have plunged 80% in the past week in the wake of the failure of SVB, has also been weighing options to improve its liquidity, according to a Bloomberg report, which cited people familiar. The San Francisco-based lender is likely to garner takeover interest from larger rivals. It's very likely that a large financial institution will gobble up one of these smaller ones. First Republic Bank is actually a sweet deal because they really cater to high net worth individuals, and they have very, very strong wealth management practice. The potential sales come after S&P cut the lender's rating to junk on outflow risk on Wednesday. Fitch Ratings also downgraded First Republic Bank and put the bank on a negative rating watch. If you want to play in the market and take a chance on some of these stocks, I urge you to be very, very cautious. You could make a nice little uptick very quickly, but you could also lose money. So be very, very cautious. So if you want current up-to-date news, the best place to find it is usually Twitter. So just a few minutes ago, Asian shares head for declines after US equities fell. Obviously, this is kind of the knee-jerk reaction to what happened in the US market today, because the Asian markets opened up after the US market had already closed. And the dollar rallied as fresh turmoil at Credit Suisse roiled the markets, says BQ Prime. Gregory Dacko says Credit Suisse, seeking to weather a collapsing market confidence, said it will borrow as much as 50 billion francs, $54 billion, from a Swiss National Bank liquidity facility as it seeks to raise debt. If you're asking me, should you invest in Credit Suisse? The answer is absolutely no. I wouldn't go anywhere near it. This thing is a walking disaster. Just stay away. I would not put any money. I wouldn't even put your money into Credit Suisse. Credit Suisse will be the next major bank to fail, says Bitcoin News. According to a market strategist, he added that there is a run on the bank and there's a current bank run and crisis. As I said, if you want up-to-the-minute news, Twitter is probably the place where you want to get it. So what's happening at Schwab? So this very attractive-looking dude here, CEO Walter Bettinger, said on Tuesday, that was just yesterday, that he purchased 50,000 shares for his own personal account. Based on the current stock price at around $60, multiplied by 50,000 shares, that is approximately $3 million worth of stock that the CEO has bought, which is more an indication of him saying, trust us, everything's going to be fine, rather than him making an astute investment. But you got to give him credit for the fact that he's prepared to write a check and buy some stock of Charles Schwab when it seems as if their back is against the wall. So what's happening in the sectors and industries? So on the left-hand side, I have a little table that says 1 week, and on the right-hand side, I have a table that says 1 year. Now, these are the top sectors in the S&P 500. And if you look on the right-hand side, 1 year ago, information technology, remember those good old days when Jim Cramer was telling you, you must buy FANG stocks, Facebook, Apple, Netflix, Google, etc. Information technology stocks were leading the charge with a 21% gain, and energy was just shy of that gain with about 19%. Everything else below that was kind of okay until you get to real estate, which was sucky, and utilities even worse. Now, ironically, today, in other words, 1 week, utilities and real estate still suck. They just suck a little bit less than what they sucked 1 year ago. So proverbially speaking, they are doing slightly better when everything sucks, but still real estate and utilities are probably two of the worst sectors to have been invested in over the past year or so. But look at energy. Now we're down 7% just in the past week. So that's a huge hit, right? So where's energy going? I'm going to talk about that in just a second and see if we can give you some indication as to what's happening going forward. Same with financials. Of course, the financials, the stocks are getting hammered I have a lot of financial stocks, and many of them I've been in for so many years that my gains are quite rewarding, and I've been reinvesting those dividends for many, many years. Many of the bank stocks that I hold pay very healthy dividends, and I've reinvested those dividends for years. So my unrealized gains on my bank stocks are pretty good. So I'm not too concerned with short-term volatility in this regard. I'm not looking to buy financials though. In fact, I'm not even looking necessarily to buy energy at this time, although I have bought some energy stocks. The stock that I've parked most money in over the past few days or so has been Alliance Resource Limited Partnership, which is a coal company, because I like filthy, dirty coal. Oil price reported just today, so March 15th, an hour or so ago. The IEA, which obviously gets everything right, says global oil demand will outstrip supply in late 2023. Now, pay very special attention to where we're going here, because we are now in March 2023. So we are still early in 2023, and they are talking about late 2023. The IEA expects oil markets to swing from a surplus in the first half of 2023 to a deficit in the latter part of 2023. I think by now you guys know what the supply and demand curve looks like when it's favorable to energy investors, and this kind of looks at least mildly bullish to me. China's recovery is expected to drive global oil demand to record highs, with oil demand hitting 102 million barrels per day. Why is that important? Because currently we are producing less than 100 million barrels per day. And not just a little bit less, as in 99 million, quite substantially less than 100 million barrels per day, especially if you take the turmoil and the restrictions in terms of Russian production into the equation, or factor that in, and you can see we are a little bit stressed. That's also one of the reasons why the Biden regime is suddenly cozying up to foes from before, like Venezuela and even Iran, to see if there's a way in which we could probably get to 100 or 100 plus million barrels per day in terms of production. Very interestingly, he has not approached any of the major oil companies, including your favorite and mine, Occidental Petroleum, or any of the big guys like Chevron or Exxon, and asked them if they can increase production instead of threatening them on a day-to-day basis. The IEA also says that building stocks today, while there is a significant supply overhang, will ease tensions when demand surges. Now, the reason why I'm sharing this last slide with you here is because not everything is necessarily bad news, even though it feels like it is bad news. What I've done in this presentation, which, by the way, I just put together in a few minutes or so, because I felt despite the fact that I've been busy with tax filing, I cannot just be quiet when everything around us is collapsing. Not everything is bad news. I started off the presentation by giving you the headline news from Google Finance. And even if Google Finance is fake news, or Google is fake news, the headlines don't really look to me as if anyone's trying to put out any fires, or if we're in serious major trouble at this moment in time. You know, the pain that you feel in terms of unrealized gains only becomes real pain when you sell. If you sell those stocks at a loss, it's going to sting, and you're going to eat that loss, and then you need to find something else to put it into in order to recoup those losses that you've realized. And sometimes what people do is they'll sell energy stocks, for example, and just eat the loss. And then when they're looking to put money into another stock, they just buy another energy stock, which is an interesting way to sort of trade, because at the end of the day, you're probably just going to hurt yourself. From a personal point of view, for me, turmoil like this is potentially a buying opportunity, but I'd be very, very cautious to simply jump in, boots and all, and buy anything. If nothing else, you just, stay the course. Don't panic. Don't get too nervous. The market goes up and the market goes down, and the market can, be irrational because it's based on sentiment. So on that note, guys, don't worry too much. Don't stress too much. I know it's horrible. It doesn't feel good. But you know what? There's light at the end of the tunnel. We'll be okay. Take care. This is Rudy signing off. Bye bye for now.